Welcome back to Global Bookkeeping and Tax Solutions 1 to 2 minute video where we help individuals and business owners to make better decisions and to clarify some of the tax or financial accounting issues. Today we will talk about cash versus accrual basis. What is that? So in the US, for tax purposes, normally you are a cash basis taxpayer unless you request IRS to make an accrual basis. So what is cash basis versus accrual basis? On a cash basis, you recognize revenue only when you receive the funds in your account. Same thing when you spend money, you can use those expenses as deductions when you actually pay a vendor or pay anyone for business purposes. On accrual basis, if you invoice a customer to pay you, even if you haven't gotten paid yet, but you've provided the services, you've gone through the process, but you haven't received the funds yet, you have to report that as income even though you haven't received it yet. On the other side, from an expense standpoint, if you have an expense that you have recorded, but you haven't spent yet, however, that expense is an expense that you have accrued for, you can report that as expense, even though you haven't actually paid that out yet. So cash basis taxpayers normally by default are cash basis unless, like I mentioned, you request from the IRS. So when you're doing a tax return, and if you haven't requested the IRS to be an accrual basis, you are automatically a cash basis taxpayer. Hope that helps. We provide accounting, tax, bookkeeping services, and we would love to help you out. Thank you so much.